Thanks for joining us for today's Trade the Chain episode. I'm joined by Doug, the Everyday Man DeRosa, and Trade the Chain's Director of Research and Chief Community Officer, Nick Mancini. You might have caught him just a short while ago. He was doing the Trade the Chain channel midday market update, and he's going to bring some of those nuggets, those good nuggets of news and technical analysis over here for you folks to take a look at. We got a really interesting week. Obviously we got FOMC, we have earnings. Let's see what's happening right now. We got a total market cap just shy of $1 trillion, 996 billion. Bitcoin at 21,877 with a daily sentiment neutral, just shy of 50 at 46 under 100. Ethereum took a sharp drop yesterday along with Bitcoin. A lot of people front running that news. Or front running the earnings week, 15.92. We got same neutral action. Hottest on Twitter. We got Audius coming in, 200% social media increase, down 4.91% in price. And if you don't know, they suffered I believe it was a $1.1 million hack on their smart contract. So they're trying to work through that. That was one of late 2020s big jumps when it came to issuance. Also got Chainlink. Social is up 170%, price down minus 4.62. We'll go over to the top gainers. GNY, 27% gain, but hugely bearish on the daily sentiment with a score of 28. And it doesn't surprise anybody if you go down to the lower right, most bearish coins. You got Audius down there as well, and GNY, which was just the top gainer. Over on the most bullish, you got FTT, which is FTX's token. A lot of talk going on with in social media with them, especially in regards to Voyager and their takeover plan that they imposed. Here we got the daily market coin screener. Everybody's down just slightly. Yesterday was where the big drop happened. Pretty neutral right now going into what we are expecting is earnings season. Nick's going to go into this a little more as well. We got the big boys coming at you all week, every single day. Look at that schedule. Where's the market going to go off of those? Well, that's why we're here every day. So FOMC is on Wednesday. That's going to be big as well. Nick, what do we got?
Yes, sir. So, in just following up, to your analysis, today not a huge day for earnings, and I think that's why we're kind of flat for the day for the most part. Is I think the bulls and the bears are really just fighting for placements right now. Alphabet, Microsoft, Visa, obviously huge. After the close on Tuesday, and this will actually, UPS, Coke, GM, GE, McDonald's, those will give us some interesting kind of retail perspectives. Shipping, basic, stupid stuff that pollutes your body. McDonald's, GEs, and everything, GM, and then obviously come over and we basically have the NASDAQ is reporting what Tuesday, Wednesday, and Thursday after close. So these three, Meta, Apple, and Amazon, I think will be massive for the market. But what's interesting is while Meta reports, we will also be getting FOMC news. So we have Fed interest rate decisions, 2 p.m. Eastern on Wednesday. Nothing, consumer confidence will probably be a little bit important tomorrow. That may push around some price action. But the federal funds rate or Fed, is going to be the biggest impact on the market, I think, this week, considering that we got in the news telegraphed 8 days ago. We put that in the newsletter. We're expecting 75-point basis hike based on that. And it'll be interesting to see if we get what we expect, and we'll obviously discuss, whether this is a buy the rumor, sell the news, or kind of reciprocal. Then we obviously have GDP. Now, this is interesting, and probably another talking point we'll have. GDP, the technical indicator for recession, is 2 straight quarters of negative GDP growth. We don't know that we're going to see negative GDP growth, but if we do see, as the consensus in the forecast is a bit of a beat, the White House is already prepping the massaging of the GDP definition, and is saying that 2 consecutive quarters of negative GDP growth does not technically constitute a recession under the way that the current administration is viewing it, which is a bit absurd. But, we have to understand how all of this news is going to impact market sentiment and things like that. And we also have personal income, personal spending, PCE all on Friday, which could completely shock the markets, considering these are kind of inflation metrics heading in to the weekend after we get all this data. So, I mean, it's an absolutely insane week. And I think it's very much why the S&P 500 is more or less flat, why Bitcoin is flat for the day. And I think, everyone is just positioning for what comes next. Now, and in terms of what can come next, Bitcoin 21.2 and 22.6 or 22.5, probably a better number, are your short-term high targets. Bears very much, I think, are targeting, all the way down to 21.4, 21.2, potentially mid 20 if this level is to break. As you can see, we just have a massive lack of interest, underneath this current level, and we have a massive amount of interest above the current level. So it's clearly a lot harder to break higher than it is to move lower, at least visually. But we don't know exactly where things are going to end up, just given how differing the opinion is on the outcome of this week's reportings. Now, sentiment is, as Alex said, neutral. We are neutral to bearish. Technically, I wouldn't consider this a bullish continuation because of how bad this is. So I would expect if this continues neutral to have a bearish continuation. Very similar for ETH, though, and this is, ETH BTC. If you've been looking at this chart, ETH has been much stronger than Bitcoin. Ethereum is neutral to bullish right now after a big bullish sentiment. So, when looking at the ETH chart, or Bitcoin chart, we've been moving lower since the 20th. Ethereum has not entirely been matching that. So, you would expect Ethereum to show more strength on any potential downturn than Bitcoin currently. But that could change at the drop of a dime. Although Ethereum has been showing strength, it could completely disappear if we have, a very bearish kind of situation in the market. And, we know the bigger they are, the harder they fall. And since this has not come down, there is a, just based on the analysis that we took on Bitcoin, massive amount of interest up here. But if we start breaking below 1,500, all that interest disappears, and the blue is sell interest. So you can see that if we start breaking below here, it's likely that 1,350 could come extremely quickly if 1,500 falls. So those are kind of your levels, and of course, if you are bullish, then your fight higher is going to be much more difficult. 1560, 1550, and then obviously 1600 if you're a bull on Ethereum. Personally, I said this on the call earlier. I believe that given the front run, we likely continue lower. But I would assume that we're going to see a lot of volatility, and that bears are not just going to give this up. They'll probably try to catch you in some longs and try to freak retail out as they typically do. So this is probably one of the most difficult levels that I have had to analyze in quite some time, just because we've reached equilibrium more or less, at least temporarily. And when you're sitting there, even and we've talked about this many times, I never try to trade median RSI. If you go down to the LTF timeframes, there's a lot that we're sitting in the center of where you would expect. And I'm looking for volatility, but I just don't know where that's going to end up given what we've seen. ETH has been trading in that flat pattern for 5+ days. It's going to break out one way or the other, but anybody's guess is as good as mine, because think about these scenarios. Earnings last week, not horrible. We obviously rose higher. Now we've obviously set ourselves up, and the White House is setting everything up to try and push things higher, even if things aren't exactly what we want. So we could have bad earnings. We could get the FOMC, we think, and then GDP prints slightly higher. I think in that scenario, the market moves higher. Now, but if earnings stink and then GDP is stinks and FOMC's as expected, I think that would push us lower. And then who knows if we get a 100-point basis hike? That'll obviously shovel us lower. But how does that impact if GDP beats and earnings beat? We have a holy trinity of crap in front of us.
Yeah, we really do. I mean, the number one buzzword is volatility, right? So it's going to be like a seesaw the whole week, which makes our short-term stuff and what we do, Nick, pretty difficult. I mean, right now I'm entered into an open short position to try to front run what I expect to be some bearish news coming out of earnings. We'll see if that works. We speak a lot about the irrational market, and last week we had Netflix, which lost. They were expecting 2 million subscribers lost, but only only had 1 million subscribers lost.
No, they lost less than they expected. Is basically the easiest way to say it.
The stock shot up. I mean,
because, and for those listening, like it would make it. It's basically what happens is the market puts out expectations. Those expectations are obviously part the performance, and then part what's happening in the economy. Given how bearish we've been, what's happening is the expectations are being kind of massaged to a degree to where it may look a little bit positive, even though it's a negative situation. So losing less than expected is a beat, which means price moves higher. And this is how absurd things are.
Well, we're at the point where less bad news is positive news.
Exactly. And that's what makes talking about this so much more difficult, is because if we just had earnings, much easier analysis. We just had FOMC, and we've been through this many times. We've just had FOMC, we've just had PCE. We've basically got something that I think would send us lower, then send us higher, then send us lower back again. And if you're trying to trade that volatility with any skill, if you haven't been in markets 5-10 years, it's the easiest way to get ripped up. And it's tough to say that with a straight face, but it is unfortunately the case.
Nick, is there anything there in the charts, at least for BTC, if it loses the 21.5 mark, to show that it could go down to 15? I know that's an area that people are calling for, given it's such a heavy weighted news. I mean, we rarely see weeks like this ever where there's this much going on, because then after this, it's kind of like a vacuum. There's not that much going on until really September. Could this be technically the week or the next week or two where we see that flush down?
Yeah, I think it's more likely than not. And I'm hearing more calls than I've heard before for potentially August to bring some doom. I'm going to go ahead and try to remove some of these lines right now. But basically, the best indicator that we have, and I'm actually just going to get rid of these so that it's a little bit more visually appealing. But we did close below the 200-week moving average, and this was a big target for a lot of people. And this is on Bitcoin. If we actually move to Ethereum, what's interesting is we closed above it. And that's why we're seeing such difference in Bitcoin sentiment, as well as, Bitcoin versus Ethereum price action. But I think, if we're looking at volume, the fact that, we have some interest up here. So that's 18. That's a big number, and people have been calling for on the high side for Ethereum. But if we start moving lower, there's a lot of liquidity gaps. So I don't want to say that, there's any sort of metric or any sort of indicator that's going to say we move to, back to triple digit Ethereum, whatever number that is, 987 or 15K Bitcoin or less. But I think what people will be looking for is if we end up getting rejected from, these levels where there is a lack of liquidity, typically the market starts to gravitate towards liquidity zones. In this case, from a long-term perspective, or around 13, 12, and if 12 and if 1K were to break, then we would start heading back towards 700 and such. Now, there's no foolproof way, but if we lose the 200-week moving average on Ethereum, it's very likely that we would move back lower into triple digits to these liquidity areas. And if we completely got rejected from the 200-week moving average on Bitcoin, it would be very likely that we would continue lower, at least back to recent lows, where you would expect some support to be. Now, I don't know why my volume indicator doesn't like the weekly for some reason, but I'll post something in a Trade the Chain to show higher time frame liquidity levels with this. But
in the middle of the screen, Nick, just a quick question with the moving averages right there. What are those? And those look like they're about to cross at some point. Will that cause obviously further downside? The two moving averages.
So this is the 200-week on blue. This is the 50 in kind of the white, and then 100 is gray. So these are 200-week moving average, 100-week moving average, 50-week moving average. So So what's called a bearish cross is typically when the 50 crosses the 100. I think 50 crossing the 200 is the true bearish cross, but obviously there is a metric to be made. Now, what's interesting about these crosses is they typically get front ran in the opposite direction just before slicing through, and then they get run back. Because if you're looking at such a simplistic indicator, the market makers are like, okay, these people are trying to look for black and whites when we're in a sea of gray. So I'm typically going to trick them. So that could have been this front run right here, expecting that, and then now we'll hover around this area, potentially move down. It's not a great metric. But if we do end up moving into August, and there is a potential for this to cross, and we're still sitting in the low 20K area, then I think your analysis would make a little bit more sense to try and play that, but not exactly just yet.
Interesting times for sure.
See, as you can see here, just for quick analysis, this crossed. Now, when you were seeing, if we were in the same scenario as we were before, this cross, you'd be looking at it right here, right, Doug? So you'd say, we're going to go down. No, we jumped up how many percent to touch it? We jumped up 20% before actually playing that motion. Now, very similar here. When you were seeing that, you were probably looking, when you were seeing this cross, you're looking at it down here. We jumped another 20% before seeing that. Yeah. And then the cross occurred, and now we're moving lower. The cross occurred then. So just in that scenario, that's typically what we see. Now you're looking at it here. Well, maybe we zoom up to 30K. I don't think that's going to happen because not all time frames are the same, but that's how you would look at that type of analysis. Just looking at a lower time frame gives you a better idea.
Jeez, look at those. Those were the good old days right there.
Yeah. So in this analysis, if we do not end up cracking higher over the next few weeks, and this ends up crossing, let's say mid to late August, based on previous time frames, you would expect the cross to actually bring with it some bearishness. So maybe we don't get stuffed soon, but maybe it does happen if that cross comes to fruition. There's another example of your analysis of your opportunity there, Doug. Right there. And then boom, another one right there. Happens. I mean, it happens every time. So I guess thinking about that, maybe there's a chance for high 20s as we head into August. Maybe we get a flush here, bounce up. I don't know. It's a bit too high of a time frame to tell. But we will definitely come back and reassess that, since it does seem to be a good metric in time.
Don't put the bad juju on my positions I got going right now.
You got a short. Oh yeah, I know. We don't want to go. We don't. Well, we do want it to go up, but not before Alex makes his money.
Also, I don't know if I got my Alcatraz cup today. And the best thing about Alcatraz is Alcatraz was never no good for nobody. I just wanted to show that off.
My trading bags in Alcatraz.
So, I mean, generally, I feel like I'm going to be sitting on my hands most of this week, Nick. After this position, I'm basically putting I'm throwing a bet down the table here on whether we're going to move up or down first with announcements that, who do we have today, as a matter of fact, after close?
No one important. It's like Coke. It's Coke and a few others.
Coke never killed Bitcoin.
Coke was this morning. No, Coke is tomorrow morning. I'm sorry. We have like NXP, Whirlpool, Cadence, Logitech, maybe.
It's tomorrow's that I'm worried about.
Yeah. Tomorrow is when things get crazy, and I think that's why everybody's positioning today, because typically we'll probably see some wonkiness in futures overnight and into the morning. Because Coke is tomorrow. Like, we have basically consumer discretionary stuff in the morning. Raytheon will be interesting. That's defense, but I'm sure they'll outperform.
I'll tell you, if McDonald's or Chipotle underperform, I'm closing my positions, because that always brings down crypto. That's not true, but it's how I feel.
I thought you're short. Your shorts should be printing right now. We'll probably end up heading lower sooner rather than later. And of course, I didn't place any shorts before the call, so that's just it. If we're going to go down, it's when I'm not in a position. So
just to give you, yesterday I missed the rundown, right? And that was a beautiful rundown. We were speaking about this earlier. You and I probably would have skipped the show today and gone to the beach if we had entered that rundown really well, but I missed it. So what I did was I opened up a short at 22, just over 22,000 is my average open. And I'm cool with that because we're going into the FOMC, we're going into the reports. I'm laying the bet that the first move is downward from there. And as you can see for the last, let's call it 12 hours, 13 hours, we've been literally going sideways. I'm in the money only by a couple percent, but we'll see.
Honestly, yeah, my big issue in this area is not taking the 1% wins and trying to extend them. Personally, I had
I'm trying to extend this to a 6% win.
Yeah, well, I mean, and as you should, if you know exactly what you're doing in your targets. But I would suggest to anybody who is trading, my biggest mistake recently has not been taking profits when I should have. Yesterday, just for example, before we had that giant decrease, I was long into that situation, and I had a very beautiful profit sitting there. Like it was a few percentage points, and I was overzealous and thought that we would continue higher based on a few technical indicators. We ended up getting crushed back down. My trade ended up being break even, and then I missed the move lower because nervous about the ensuing trade and never wanting to completely flip and continue to get swept up in the volatility, as they say. So just my personal mistakes, so others can learn, are not taking profit when I am in profit. And I think if you are experiencing this volatility, you cannot look for the same goals that we were looking for several weeks prior when we were facing, in May and June, when we were dropping 10-20% in a week. It's less likely to occur now. And if you don't take your money off the table, you may lose it just because these market makers are typically, and I hate to say it, smarter than us. Maybe they're not, on paper, but they have more data, they have more access, and they know what we're doing. So it's something to consider.
Yeah, if you don't know exactly what you're doing, I would suggest staying out this week altogether. The seesaw will just rip you apart, as Nick said earlier in the show. That being said, Doug, you're the everyday guy. What's life for you right now and others across America? With the economy where it is, Yellen said the economy has slowed down, but we're not yet in a recession. I'm not sure she lives like the rest of us folks.
She uses the word salad. I love that phrase, word salad. Yeah, it's what Nick touched on, this White House statement that's kind of making the rounds in Zero Hedge and other publications where Michael Burry, the Big Short guy, is saying that they're moving the goalposts, right? So we've had this classic textbook definition of the last 40 or 50 years, right? 2 negative quarters in a row. Now all of a sudden it's like, well, it's that plus maybe this other stuff. I don't know. We touched on earlier in the month jobless claims and the job report. And, you look at some of these numbers, I think it's 58% of Americans right now are living paycheck to paycheck. That comes out to 150 million Americans. Regardless if we're in a technical recession or not, there's a lot of people struggling out there. Maybe some of those new jobs created were people that lost money in their IRAs that had to go back to work as retirees. Maybe it's people working second jobs. So regardless what our White House and whoever's in charge these days wants to call it, there is still real pain. And Powell kept saying, look, there's going to be pain, right? So the number is really kind of irrelevant what comes out. And Nick discussed this a little bit a while ago too, that, these rate moves, they take a while to flow through the system, right? So we're getting 75 bips this week and maybe 100. That's going to slow down the economy at some point, right? It's not going to slow it down next week. It may take a couple months. So it's not, regardless of what the market does this week, if there's a major rally in equities and cryptos, still doesn't change what's happening out there in the world, right? There's still some people who are like, man, this sucks. I don't care if it's a recession or not. Like, I'm barely making it, right? So it is still tough times ahead for a lot of people.
Yeah, and the economy and the market are two separate things. So the economy will rebound. The market will rebound prior to the economy. And the market's waiting on the federal funds rate to top. Now, Wall Street Journal literally told us 8 days ago, if everything goes to plan, the federal funds rate will top likely in December. Or well, I shouldn't say will and likely, will top in December. That's basically what that Wall Street Journal article said based on reporting.
And I'm in agreement with that.
Which I'm fine with. But if that's the case, the market should be topping or the market should be bottoming imminently. But we're still getting calls for 360, 340 SPY and things like that. Now, maybe these earnings, if these earnings are poor, we'll have to look for Q3, which would be what's the month following the end of Q3? October. We'd have so the end of October is when we would finally start to see earnings lift out of the mud, hopefully, I guess. But and to Doug's point, if the federal funds rate continues to grow, then we may see more pain going into Q3, and we may not start coming out till end of Q4, which would be January. End of January would be when we start getting those earnings reports. But I don't know. I think there's no perfect way to time a bottom, but I think if the federal funds rate continues as expected, and the Fed starts telegraphing that, then we've reached a bottom. We just have to experience a bottoming formation before moving higher, which could mean at least a touch back to the lows. So
and if you look at just jump in for a second, Al, if you look at what Powell's done already with the housing market, he achieved what he wanted to, right? At least slowing some parts of the economy down. I mean, the housing market is frozen right now. There's really no buying going on, and prices are now starting to retract in a lot of markets. So he's shut out, that part of the economy, which I think is like 25% of GDP is housing, right? So he did what he wanted to with that. Higher rates, let's move this down, cool it off. He's certainly done that with housing. So.
To Daryl Lister's comments in that are here in the show. One, Daryl, I'm with you. I'm playing small ball these days, getting those singles and doubles and stacking the pennies into dollars, because that's where the opportunity is right now. The long plays, there's just too much volatility. September, he talks about September. He talks about the elections. The one thing we have here that is a loosey goosey is the midterm elections. I think that I've said this before, and I'm going to stick to my guns on this 100%. I don't think, and there's a lot of people that I think agree with my opinion, but if the Republicans take the midterm elections, we're going to accelerate out. If they don't, we're going to languish in a long recovery mode. So I do believe that no matter what the FOMC does this week, that based on the midterm elections is going to decide how long or short our recovery is. I'm not even a Republican or a Democrat, but I just know the Republicans are going to accelerate it out.
I mean, I think everybody's. I'm trying to think. Like, I don't think the midterms matter. I'm sorry. I
disagree with you.
It's local elections. Nobody of significance is up for removal.
It's planting the seeds for 2024. That's what it's doing. Now you go into social media, you go out on the street, forget some of the fake news stuff that happens, like Musk cheating on Bryn with his wife or something. But you go out into the everyday man, and I'll tell you, they're just the word Republican makes the economy go up these days. That's how desperate people are. I mean, Doug can tell me if I'm wrong, but
I would say that if the Dems lose, then Powell's the scapegoat, right? They're going to blame somebody. That's what they've been doing, right? They always point the finger. So he's the odd man out.
How does that affect policy? And then and how does that policy translate into market action? So I get a bunch of retail people will be pissed off. No matter what happens. And I get that Republican right now, the word Republican seems more bullish, but let's say, Republicans take over Congress. What policies changes? Like federal Jerome Powell is still in control. We're still looking at federal funds rate. Earnings aren't going to change.
I get you, but they don't really have to change because the highway is running out. By the end of the year. I mean, they can't do anything drastic at that point. They've used all the nails in their tool belt.
No, I understand that, but I'm just saying, so the Dems are likely to lose and just for a disclaimer, I'm not political. I think anybody who is extremely political is falling into the wrong category. I like to just look at policy and situation. But in this scenario, let's say Dems lose, Republicans win. The market rallies on what? Just that would be a fake rally because no policy.
I think Daryl Lister has good sentiment. The comment he just made about budgetary spending. I think that's a good comment. I think it lays the foundation for the Republicans to feel good about going into 2024 elections. And
But
quite honestly,
spending means market goes higher.
No.
It does though. If we get an infrastructure bill or something like that, or a climate change bill, I would be shocked if the market
we get an infrastructure bill or a climate change bill, I don't know what's going to happen. You can't say that the market is infinitely going to go up on higher spending. We've spent so much over the last 2 years.
I agree with you. I completely agree with you. But more spending does translate to higher market price action. Not whether it sticks around is one thing, but I think, if Congress spends, we go higher in the market. I think we just watched that. They're not doing anything. They haven't done anything for 6 to 12 months, and look at our market. So I think, you're correct. Now it's kicking the can down the road, making the situation worse when we have to deal with it. But spending equals higher price action.
That's all screwed up.
100%.
It's all screwed up. That's 100%. Why I'm going with Bernie.
I just think I think it's just an argument to make us argue, because it also plays into a dirtier, nefarious situation of Dems versus Republicans, when we're all really just fighting for the same thing to remove inflation and get the government out of our house. I don't think anybody wants either of those things. So, at the end of the day, what is going to move price action? It's earnings, it's the inflation numbers, and it's federal funds rate. So I don't see any of those changing, no matter holds the majority of Congress after January, whatever. At least just in my opinion.
I beg to differ, but that's what life is all about. I hope all I'm about is that everybody makes money. That's all I hate people who have to worry about the rent, man. Bottom line.
Agreed.
All right, folks. Thank you for joining us today. That was 31 minutes of good discussion right there. Don't forget to stop by Nick's Daily Show on the Trade the Chain YouTube channel, please. It's the best 15 minutes you will ever spend daily. It's way better than coming over here and listening to us bicker. Doug, I think, is almost. Doug, are you a boomer, or are you? What are you? What do they call you?
Am I a boomer? I'm Gen X.
You're Gen X. All right, I'm Gen X too. All right.
Can you add the I can't, for some reason, can't add chat in the comments through our platform. Can you add the Trade the Chain YouTube in the comments?
Yeah, hang on a second. Let me get to it.
That might help with new access.
You're Gen X also, Alex, right?
Oh, I'm Gen X. Yeah, I'm 40. I'm 47 this August.
I'm just on the millennial cusp.
What does that mean?
Means that depending on exactly what metric you look like, I could be like not. I don't think I'm Gen Z, but I could be some super weird 5 to 7 year. I think it's Gen Y or something like that. It's something weird.
Gen Y.
I by most standards, I'm a millennial.
All right. Here's I'll post this in the comment, folks. Take a look. This is a safe link. Go over there. Hit the subscribe button. Get the best 15 minutes of your day over there.
By the way, NASDAQ down 121. We're at the lows of the day.
Yep. S&P's at support.
We literally just hit $1 trillion in market cap, so we're up at least. Visually, I just can't stand it when I see less than $1 trillion.
I think someone's buying stables. So they have to be if we're rising, because we're transferring crypto in. We're transferring top assets into stables right now. I'm watching it happen. The price is going lower. So I think if people are buying more stables, then they're expecting a bottom soon. If that's the case, I don't know. We'd have to obviously look at on chain, but a higher market cap while prices are decreasing to me means someone's buying stables.
Well, we'll check out the on-chain volume over at USDC and Tether. It's one of those two most likely. So, all right, folks, hang on to your handlebars. We'll be back again tomorrow. Same great time, same great place. Thank you very much, Nick, Doug. Thank you guys as always.